Good morning and welcome. You're watching Market Cafe on ET now with Ankita Saxena as well as myself, Harsh Saita. This is the show where we bring you everything that's happening in global markets, what's the context like before the start of trade today, as well as which stocks to keep on your radar. So we'll go through all of those things before 8 a.m. My apologies today. And let's start off straight away with the first thing, which is Ankita taking us through how global markets are.
Good morning to you, Harsh, and good morning to everyone. It seems like the US rally is back again. Stocks yesterday rose as traders look ahead to a key inflation report regaining their footing after the S&P 500 and Nasdaq suffered their worst weekly declines in nearly 2 months. Dow Jones Industrial Average closed at 376 points higher, or 1.1%, the best day in February. S&P 500 climbed 1.1% and the Nasdaq Composite advanced 1.4% in trade. Now, Microsoft led the Dow's gain, rising 3.1%. Nike and Salesforce each gained 2.4%, boosting the index further, and Intel added to the index by 2.7%. Now, investors will get more inflation data this week. Now, today, January CPI number is due. It will be released tonight, showing if price increases have slowed amid central banks' rate hiking spree. So far, investors seem to be betting on a solid CPI print that shows inflation is cooling and that a pause or pivot in Fed rate hikes may be near. Now, let's look at the European markets. Now, European markets also closed higher. DAX was up 0.5%. Stock 600 was up 9.9% with all the sectors and major bourses in the green. CSE was up 1.1% and FTSE was up 0.8% in trade. So all in all the markets in the green. Now, very important key CPI number to be coming out from the US markets as of today. Harsh, tell us, where's the crude at?
Well, Ankita, crude has been, quite whipsawing quite sharply, and that seems to be the story as well. So, where crude is at currently, Brent at $86 a barrel, slightly elevated. We saw it at around that $85 or just below that $85 a mark yesterday, and we're seeing WTI as well, just above about sub $80 a barrel. And why is that so? Russia has cut its production by 500,000 barrels per day, and that amounts to around 5% of its production. So not really a meaty amount, but it's still large enough to make a dent with regard to the sentiment where crude oil is concerned. The other piece is, of course, the China reopening factor that's continuing to play out. The Russia curbs are largely on the back of retaliation against the West with regard to their curbs that they've placed on Russian oil, and that's what's keeping crude buoyant at the moment. So we're expecting crude to be at around that $85-86 a barrel. Brent is where we are seeing it at the moment. Ankita, talk to us about what to watch out for today in terms of events.
Well, thank you for that, Harsh. Let's quickly take you through all the events that are lined up for today. Now, we are in the thick of earnings. We have a couple of earnings coming out today. We have Apollo Hospitals, we have Eicher Motors, ONGC, we have Grasim, Adani Enterprises, Bosch, Biocon, Ipca, Bharat Forge, Radico Khaitan, PI Industries, Bata, Prestige Estate, Indiabulls Housing, SpiceJet, Siemens, all of them coming out with their Q3 earnings. So these are the major events that you need to watch out for in today's trading session.
Well, and the death toll from the earthquakes that hit Turkey and Syria passed 36,000. Tens of thousands of people were also injured in the earthquake. Only a handful of survivors were pulled from the rubble more than a week after the disasters. UN Relief Chief Martin Griffiths said the toll is set to rise further. Officials have said this is the worst natural disaster to hit the region in a century. And all eyes will be on the release of the Labour Department's Consumer Price Index data today. The CPI was trending lower as 2022 came to a close, but it could show that inflation was strong, perhaps even stronger than Wall Street expectations. Economists are expecting the CPI will show a 0.4% increase in the month of January, which would translate to a 6.2% annual growth.
And Japan's government is expected to name academic Kuzuo Ura as its pick to become next central bank governor. This is a surprise choice that could heighten the chance of an end to its unpopular yield control policy. Now, Uda is a 71-year-old former Bank of Japan Policy Board member. He will succeed Haruhiko Kuroda, whose second 5-term ends on April the 8th.
And let's talk about Ford. Ford Motor announced that it will collaborate with a Chinese supplier on a new $3.5 billion battery plant for electric vehicles in Michigan, despite tensions between US and China. Lisa Drake, Ford's vice president of EV industrialization, said the automaker will own the new facility through a wholly owned subsidiary. The plant is expected to open in 2026 and employ around 2,500 people.
US Secretary of State Antony Blinken is considering meeting top Chinese diplomats in what would be the first face-to-face talks after the United States shot down a Chinese spy balloon. Earlier this month, Blinken postponed a planned trip to Beijing due to what he called an unacceptable violation of US sovereignty and airspace by a Chinese surveillance balloon. The US military says it has since shot down another 3 unidentified objects flying over North America.
And switching to Russia and Ukraine, NATO chief backed reports from local officials that a major new Russian offensive had begun. This is just days before the first anniversary of Moscow's invasion. Ukrainian defenders, who have already held out for months now, were braced for new ground attacks. Positions in Bakhmut have been fortified and only people with a military role were being allowed in.
And well, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Keeping up with our values, we present the second season of Nivesh Ke Fande. And on this edition, we discuss saving and investing, which are both important concepts for building a sound financial foundation. Let's take a look.
Hello and welcome to another edition of Nivesh Ke Fande. Today we will talk about something that is at the foundation of a person's personal finance journey.
That's right. We're going to look at the savings and investments and the different roles they play in a person's financial portfolio.
Let's start with savings. It's when we keep aside money for an emergency that we can have easy access to. So basically, savings has high liquidity.
Investing on one hand is using money to get some assets that we hope will grow in future, thus helping us grow our wealth.
Well, under the heading of investing, there are a number of different assets that a person can explore, which provide varying levels of returns along with different levels of risk involved as well.
Yes, so investors can pick and choose the investment options that are in line with their risk and reward appetite, and most importantly, their time horizons. So if someone wishes to invest for a short to medium term duration, they can invest in debt mutual funds, and someone who's looking to invest for a longer time horizon in a higher risk product with relatively higher returns expectation, they can invest in equity mutual funds.
And there are many options that would be suitable to persons' varying requirements, and the best part is that people can now invest as low as rupees 100 per month through different mutual funds.
Another point in managing your personal finances is that a person should be disciplined. Being disciplined with savings and investments is important. And through mutual funds, this discipline is made easy as a person just has to opt for a SIP or a systematic investment plan.
Absolutely, and with the SIP, an amount that is decided by the investor is invested at a time fixed by the investor in a mutual fund picked by the investor himself. So in this way, the investor gets full freedom to choose their investment journey as well.
That's all on this edition of Nivesh Ke Fande. Hope we've been able to explain the difference between savings and investments for you. Stay tuned for more such investment insights only on ET Now.
Welcome back. Well, the big news domestically yesterday was that the India January retail CPI print came out and the CPI has spiked to 6.52%. We were estimating a number of around 6%, while core inflation has remained unchanged at 6.1%, which is definitely a plus. Food inflation has surged to 5.9% against 4.1% last month, so that's what's really led to the spike. Let's go across to Maithili Pusnurmat, our consulting editor, to decode some of those CPI numbers.
After declining for 2 consecutive months, retail inflation, or the CPI, Consumer Price Index, has again picked up in January to an unprecedented number, at least going by what economists' estimates were, of 6.52%, well above the RBI's own tolerance band of 2 to 6%. That is the RBI's target range. Remember, in December, the inflation rate was only 5.72. What makes matters worse is that food inflation has picked up to 5.9%. In December, the number was just 4.2%. Given that the winter months normally see food inflation declining, this is particularly distressing. Even more so than this is the fact that cereal inflation is remarkably high. It's run up by 2.4% month on month. That means between December and January. Given that cereals form the bulk of the consumption basket of the poor and the lower middle class, I think there's virtually nothing that is good as far as today's inflation numbers are concerned. Also, the RBI had ironically lowered its estimate for Q4, the current quarter that we are in, to 5.6% from the previous monetary policy number of 5.9%. So clearly the RBI has got it all wrong. This is also the third consecutive quarter where the average inflation comes to more than 6%. Under the framework of the monetary policy targeting framework, if the RBI is unable to stay within that 6% band for 3 consecutive quarters, it has to write a letter to the government. It's already written one letter. Will it be an encore? We'll have to wait and see whether the RBI feels obliged to write a second mea culpa to government. But as of now, we don't know, because even the contents of the first letter have not been made public.
And we also spoke with the Saugata Bhattacharya, who's the chief economist at Axis Bank, who says that with the hawkishness from the RBI and the current numbers, inflation might even reach 6.75 levels. Listen to what she had to say.
Quite surprised, if not dismayed, quite surprised. I mean, we had expected cereals to have contributed to an uptick in inflation from the 5.7%, but certainly nowhere close to this number. And my sense is that the MPC would probably have had a preview of the coming surprise in the kind of decisions that you saw in the language statement forward guidance of the MPC and the governor. Food prices is a problem. I mean, I'm not trying to downplay the seriousness of the high food inflation, but bigger problem, and in particularly in terms of monetary policy, fiscal policy, etc., trying to manage this inflation is this persistent core inflation, 6.1 or higher in this. That, to my mind, is the real challenge for policy as of this point in time. But if these kinds of numbers persist, from a monetary policy point of view, we are likely to go far above that 6.5%, the peak rate that we were, the terminal rate that we had in mind for this cycle. I'm now convinced that we are at least in a 6.75% range. Probably, God forbid, that even 7 is not out of the thinking.
Well, and the other piece at the is the auto sales data for January, which suggests that volumes were up around 17% year on year due to strong demand from utility vehicles and better consumer demand, according to a report by CM. But two-wheelers, which are an indicator of the health of India's lower to middle class households, suggest that demand has been sluggish. My colleague Aishwarya Patil breaks down the report by CM to give you a better picture of the demand for auto.
That's right. Auto sales data is looked at very closely as one of the key indicators to gauge private consumption. It is also used to calculate a country's economic growth. Well, this time around, SIAM data suggests that The wholesale passenger vehicles volumes rose by 2,98,093 units, which is a record high for the month of January, 2,54,000 units which were sold as compared to last year. Driven by strong demand for utility vehicles and better consumer sentiment, the wholesale passenger vehicle sales volumes rose by 17.2% in the month of January. Now remember earlier FADA auto sales data indicated a growth of 22% in the passenger vehicle segment. Among other details, SIAM also suggests that the now popular and more pricier UVs or the utility vehicle sales climbed around 28% and continued to outnumber the sales of passenger cars in January. Two-wheeler sales, on the other hand, were only up by 3.8% for the month of January as compared to 6.3% rise in the month of October, which was the festive season. In fact, the president of SIAM, Mr. Vinod Agarwal, said that the two-wheelers in the recent times have not kept in pace with the other segments of the vehicle segment.
And well, with that, it's time for us to slip into a short break. But before that, we'll give you a lineup of what's waiting for you on the market. First up, we have Chintan Thakkar of Info Edge at 8:30 on the earnings with ET Now. And we have Jim Rogers at 9:20 on his view on the global macroeconomics. We have Gautam Shah of Goldilocks Premium Research on his view of the market. We also have Devesh Srivastava, Chairman and MD of GIC, on the earnings for the company. And we have Naresh Trihan and Pankaj Sahani of Global Health on the earnings with ET Now.
Right, and we at Times Network are always looking to create investor awareness and make financial matters simpler for you, our viewers. Keeping up with our values, we present the second edition of Nivesh Ke Fund. On this edition, we discuss India's economic growth and how you can benefit from that growth. Listen in.
Hello and welcome to yet another edition of Nivesh Ke Fund. I am Ajay Sharma. Now it's a well-known fact that India's economy is on a very strong growth trajectory.
Yes, Ajaya. In fact, India is considered the fastest growing emerging economy across the world.
But Kavita, how can the everyday Indian be a part of this growth story? And what are some of the avenues that they can explore?
Now, one of the relatively easier and simpler ways to do this is to invest through mutual funds.
Absolutely, mutual funds provide the investor an avenue to invest in multiple asset classes.
Yes, Ajaya. Through mutual funds, an investor can get access to equity of shares of the Indian stock market as well as global stock market.
Not just equity, they can invest in bonds and debt market and even invest in gold and silver through the mutual fund route.
Right. One more thing, Ajaya. By investing through mutual funds, a person can invest in small denomination and does not have to make large investments at one go.
Yes, this helps the investor continue their investment at regular intervals for a long duration of time. Additionally, when a person needs money, they can redeem the mutual funds unit worth the amount they require easily.
Absolutely. One does not have to sell the entire investment. Thus, one gets the benefits of liquidity and flexibility also.
So if you believe in India's growth story, make sure you're a part of it. And the easy way to do that is by investing in mutual funds.
And with that, that's all on this edition of Nivesh Ke Fund. Thank you for watching.
And moving on to the aviation space, the October-December quarter saw some robust growth for Vistara, as it was the first time since its beginning in 2015 that the airline posted operational profits. My colleague Sameer Dikshit caught up with the Vinod Kannan, CEO at Vistara, to understand the business as well as the revival that the travel and tourism sector is witnessing. Listen in.
The last year was phenomenal for us. I think the demand has come back in a strong way. The fact that Vistara as a brand has also grown in stature, thanks to the support from our customers and our shareholders and everyone else. I think that kind of shows in the numbers. Both the load factors as well as the average fare. Of course, October, December is the strongest quarter, but they have been very positive. And the revenue side has what has driven us to give this good result.
You think so? The momentum will continue for the next quarter as well? And if not so, what factors could actually hamper it?
No, I think the demand still remains strong. Even if you look at the reports which are released by the ministry, load factors have remained in the high 80s to 90% load factor. So I think demand is strong. It's still going well. Of course, seasonality is important because the peak of October to December may not be repeated in this particular quarter. But having said that, the other aspect which we are seeing is that costs are slowly going up as well because US dollar is strengthening. Of course, it goes up and down, but today we are almost 10% weaker Indian rupee compared to what it was 1 year ago. Plus, there is also a cost escalation because of inflation, because of everything that's happening in the world, because of the war. So these are all concerns for us. But fundamentally, I think demand in India will remain strong, and we are very hopeful at least for the next 6 months.
After COVID, we've first focus was to bring back the services that we've scaled back. That was done not entirely for the cost reduction, but to ensure the safety of the passengers as well as our employees on board. So last year was mainly towards the first half, we tried restoring back the services. Second half onwards, we'll focus more on improvising it. We've introduced many things on our flights, like in-flight TV. We've brought up with amenity tickets in premium economy as well as business class. We've brought back various choices of leaker services on wide body and short-haul international. And domestically, we are continuously looking to improvise whatever we can do with a short flight leg. I think that's an important. Apart from that, we are looking at improving many aspects on the other touch points to ensure the seamless customer experience, introducing technology on website and mobile app. These are the things, these are under pipeline, and we hope to improve the same in the next coming 6 months to 12 months.
And regarding the international sector, the Europe and the USA market, you think so that the numbers will keep on growing with these sort of changes or the new initiatives that you're planning to take?
I think the 3 wide bodies that we are operating, we are seeing a good uptick in demand. I think we are almost operating with decent load factors on that front. Being barely 2 years old in international market, I think this is a good initial response we've got. And with another 4 wide bodies which are lined up, we expect to do well in those European markets.
Well, and sticking to the skies, this is also the first time that HAL has unveiled the design of the scale model of the HLFT-42. The aircraft has a unique tail art of the Hindu god Maruti, symbolizing strength, speed and agility. The tagline, "The storm is coming." Shivan managed to speak to the group captain Harshavardhan Thakur to understand what this next generation supersonic trainer can do. Listen in to a slice of that conversation.
A lead-in fighter training requirement has been there for quite some time. The new generation aircraft of tomorrow, like the AMCA, LCA Mark II, TED-BF, etc., are all single-seater aircraft, single-crew aircraft. They have a pilot who needs to be trained elsewhere for being capable of flying them and in combat especially.
Thank you so much.
There is a culture of, there is a possibility of training them on simulators only and then launching them into these aircraft. That kind of training would be very inadequate, inefficient, and it will be very costly because all his training he will be doing alone on a fighter aircraft, which is a very expensive aircraft. As a result of that, these high-performance single-seater aircraft require a trainer. That trainer is HLFT-42, which is a very high-performance trainer, perhaps the highest performance in the world, so that it can keep pace with those aircraft and give that environment which fighters actually are exposed to.
So we see a lot of missile systems out here, and we also see an image on the tail. Sir, and everybody wants to ask that why this image on this particular aircraft. So we'll walk that side so that we keep on showing the image also.
So the number one is that we have a number of missiles on this, and that's because this has to be combat ready at all times, has to be available for actual operations at all times. Any trainer which is sitting on the ground is useless when the operations are on, so it'll be employed in wartime. As for our inspiration of the graphic on the tail, that's simply because of HL's legacy and our inspiration was strength and courage.
And well, with that, you wonder how will this aero show impact India's perception on the global stage? For that, ET now spoke with the strategic affairs expert Maroof Raja. Listen in to what he had to say.
I'm very happy to see that the same countries and the same exporters who are looking at India as clearly an export market, and India was amongst the world's largest buyers of military equipment, which it's still there. It's a dubious distinction we are trying to do away with. The fact of the matter is there is a lot happening, and I've spoken to a couple of people who are very senior in the defense industry and the private industry, and they feel all this push has started to come in the last 7-8 years, largely under Mr. Modi's government. Not that we were not making things earlier. We were making a lot of stuff, but you know, the area of defense manufacturing is a very, very demanding space. I read years ago once that the countries that make fighter aircraft have the highest technological skills. Remember, Japan is very high on technology, but Japan still doesn't make a fighter aircraft of its own. There are a lot of opportunities that are going to be coming the way of these defense exporters because they can use India as a building block and a ground to manufacture and cut down their overheads and sell it to other third world countries, because whether you go to war or not, there is always the demand for having top-end military technology.
Well, and with that, one more Make in India pitch. We'll slip into a very short break. More on the other side. We'll go stock specific. Stay tuned. Welcome back. You're watching Market Cafe on ET now. We did see US markets see a bit of green, and we're seeing a very, very sliver of, small sliver of green, if I can call it, on the SGX Nifty as well, 0.1% higher as we speak. But let's take a quick track of what Asian markets are doing. The Nikkei is higher by around 0.5% or thereabouts. We're seeing gains on the Kospi as well. That's also around 0.5% higher. The ASX 200, though, is 1/3% higher as well. And the Shanghai is also taking cues from those indices, but holding on to 0.25% in the green. We're looking at the Hang Seng, which is the only index which is absolutely flat, playing out with a negative bias at the moment. We're looking at hopefully a positive start on Indian markets, but that's about it. Let me quickly take it to Ashesha, who's going to take us through all the stocks and news. Welcome. Good morning, Ashesha.
Absolutely, a whole host of earnings that came post-market hours, and on the back of that we will have a lot of companies in focus today. First up, we have Landmark Cars, which will be in focus. Revenues for the quarter gone by stood at 876 crores, an uptick of 5% on a year-on-year basis. As far as net profit is concerned, it also saw an uptick of 35% on a YOY basis, and management commentary meanwhile over here is also quite optimistic. They say that the Indian car market is witnessing a radical shift towards premium brands. The premium cars growth is outshining the overall growth in the Indian cars industry. Lindia India also reported its numbers post-market hours yesterday, where revenues stood at 697 crores, an uptick of 8% on a year-on-year basis. Margins, meanwhile, also increased a tad bit. They came in at 24.1% this quarter versus 23% margins that the company reported same time last year, indicating an expansion of nearly 110 basis points on a year-on-year basis. Meanwhile, Hinduja Global Solutions also reported its numbers. Revenues came in at 1,119 crores, an uptick of 7% on a year-on-year basis, while company reported a profit of 52 crores this quarter versus a loss of 38 crores that the company reported in third quarter of FY22. Moving on to Capri Global then, where net interest income saw an uptick of 17.5% on a year-on-year basis. Company reported profit at 37 crores versus a profit of 64 crores that the company reported same time last year, down 42% on a year-on-year basis, while total AUM for the company stood at 8,600 crores. Lastly, Castrol India will also be in focus again on the back of its numbers, where revenue stood at 1176 crores, up 8% on a YOY basis. As far as margins are concerned, they did contract a tad bit. They came in at 21.4% this quarter versus margins of 24.4% that the company reported same time last year, indicating a contraction of over 300 basis points on a year-on-year basis.
Well, thank you for those details, Ashesha. Now let's quickly go across to Lisa, who's here with us in the studio with all the brokerage notes coming in this morning. Lisa, take us through what are the brokerages saying?
Very well. Good morning to all. The Nika has seen some cuts in the target price by brokerages, starting with Goldman Sachs maintaining a neutral on the stock. They have cut the target price to 200 from 233 earlier, and that is on the back of Q3 miss and no clear indication of a near-term pickup in the BPC segment. They have cut the revenue estimates by 4% and EBITDA estimates by 14 to 28% over FY23 to 25. Nuvama also has maintained a buy on the stock. However, they have cut the target price sharply to 195 from 251 earlier. They say that Nika has met the growth expectations. However, the margin has underscored, and the BPC and fashion, it felt the downtrading as well as the macro uncertainties impact. So, however, the growth reviving in fashion, which was a concern since many quarters, that has been a positive for the stock. And lastly, Citi on Z Entertainment, they have maintained a buy on the stock. However, they have cut the target price to 280 from 300 earlier. They say that the muted performance that continued in Q3 as well, and they have sharply cut the FY23 estimates by a whopping 35% due to near-term market uncertainties, and also the FY24-25 earning reduction is lower at 11 to 15%. They say that the ad revenue market that remains under pressure in the near term. Well, these are the stocks that are under brokerage radar for today.
Well, thanks so much for that, Lisa. Let me quickly take it to Apollo Hospitals, which is also about to report its Q3 earnings. Listen in to Sharad on what to expect from Apollo Hospitals this quarter. Sharad.
Well, in focus, we are having Apollo Hospitals, the country's one of the largest medical and the hospital chain is in focus, and it's expected to come in with a muted set of numbers in this third quarter. And do remember, it's a seasonally weak quarter. Now, the important thing is the headline numbers. If we check, the revenue is expected to go up almost 14% on a year-on-year basis to the northwards of rupees 4,150 crore rupees. But do remember that the EBITDA numbers, the margins, they are expected to contract, and they are going to come between 15 to 18% of contraction on a year-on-year basis. And if we look on a sequentially basis also, that's expected to fall in lower teens. Now, apart from this, what stands apart is the sales is expected to come into low single digits because of the seasonality. And if we look at the hospital business as well, especially the mature hospitals are expected to outperform the new business, and they're expected to grow in the range of almost 10% on a year-on-year basis. Apart from the hospital business, the occupancy is also expected to moderate, coming in from 68% to expected rate of almost 64%. The pharma distribution, however, if you see, that top line is expected to go up by almost 20% on a year-on-year basis, while for the AHL business is expected to be on a muted numbers. Now, apart from this, what are the margins which are expected? And there are three different divisions. Of course, for 24% is expected for the existing hospitals, while 16.5% is coming for the new hospitals. 7% expectation of margins is coming in for the pharmacy business, and this doesn't include the 24/7 cost. But importantly, there are two important factors to watch out for the earnings, and the first one being is the traction in the services seen in the 24/7 pharmacy services, and how is the progress happening when they are diluting their stake in HealthCo.
Well, keeping up with the earnings, Eicher Motors is set to deliver its Q3 numbers as of today. Now, what is the street expecting from Eicher Motors? We have Vinny with us, who's joining us with all the details. Vinny, over to you.
So Eicher Motors is expected to post its numbers. In terms of revenue, we are expecting a mild revenue growth of only 2% on a quarter-on-quarter basis. Year-on-year basis, it will be a 25% growth. While in terms of the profits, we are expecting a 12% growth in terms of profits on a quarter-on-quarter basis, while margins are also expected to come in at 24.6% versus last quarter what it was 23.3%. So an expansion in terms of margins on a quarter-on-quarter basis is what we're expecting. Margins, so operating performance is expected to see an uptick coming in there. Now, what are the factors that that come in for Royal Enfield? So in Royal Enfield, volumes are up by around 30% YOY and 6.6% QOQ. Mainly the volume growth is expected to be led by the healthy response in the new Hunters launch, and easing of the chip shortage is something that is supporting the will support the volume growth for RE as well. Overall, export volumes also has seen a growth of just 2% on a year-on-year basis, owing to the slowdown in the EU business and EU region, and obviously amid the rising inflation, that was a concern, as well as seasonality, all that came into play for RE. Now, other factors in terms of margins, operating leverage is there for the Royal Enfield margins. The raw material tailwinds are a factor as well. Cost control measures as well as the offset of high mix of Hunter is something that is keeping the margins in check as well. In terms of VEC, margins are likely to improve, led by the higher CV volumes and softening RM as well. And expected to report, the VECV segment is expected to report a EBITDA margin of around 7% this quarter. So watch out for the new launches that they have, sales outlook, especially in overseas market, views on the EV bike as well as the product mix are some of the factors that we're keeping an eye out on.
Well, thanks so much for that roundup, Vinny. But quickly moving on, Dinshaw Irani, who is the CIO at Helios India, says that both Paytm and Zomato, two platform companies that they own, have reported a stellar set of Q3 numbers. He also says that the Adani Group did not have a solvency problem. Let's listen in to all that he had to say.
The two platform companies that we own, right? And we frankly added once the results came out, or we've been averaging out there as such, and frankly, I mean, both the companies, the results were fantastic. In fact, our feel is that given the potential that India has of the consumer base, in fact, India, if you see the kind of consumers they can appeal to, it's like a whole of Europe put together. That's one single place where these players are working out, and especially in the case of Zomato, I mean, it's a two-player market, and they're on the verge of breaking even. In fact, they have revenue on the EBITDA level, but thanks to the hyperlocal, they're still not Blinkit. They still haven't done that. But our feel is that it's a matter of time before they do that too. And Paytm, you saw that. The results were like through the roof. What do you look at a platform, right? I mean, you're looking at the fact that it offers convenience, as you rightly said, that smaller towns may not be the convenience story. And that's why you saw that they moved out of some 200 odd towns to 25, if I remember right, the figure. They moved out of those smaller towns as such, and I mean the top 30 still account for a bulk of, majority of their revenues as such. And our feel is that even there's enough potential to go about milking the consumer, not milking, sorry, the other, giving more convenience to the consumers as such. I think Adani ever had a problem of solvency, right? I mean, it was more of a valuation call than anything else, and they were very prudent using their expensively priced stocks or whatever you want to call them as currency to buy businesses, genuine businesses as such. So obviously these are cash flow companies, and I don't think there's a problem here. In fact, we were just looking at the bond payments that are due, and the first bullets are sometime in FY of 25 as such. So they're very well in place there. Frankly, I mean, again, the call here is that you should look at valuations, and we've been very selective in this space. We have a couple of Adani companies as such, and they're both in terms of cash flows or PEs or valuations, whatever you want to go, debt equity, you want to play those names, they're very much in sync with what our guidelines give out as such. Ports business, right? I mean, they account for roughly around probably a fifth of the port traffic in the country. They account for almost 40% of the container traffic in the country. And the fact is that the group itself, all over, I mean, 1/5 of probably the power that goes in and stuff like that. So it's just a massive play as such, yeah. Ultimately, the investor has to take his own call. Our stance has been that whenever we saw a correction in these names, we did pick up the names as such, and I'll leave it there as such. And frankly, I mean, our comfort level has grown much more in the correction that came by in these two names per se. So.
And well, moving on, Prime Minister Narendra Modi recently addressed a mega rally at the Swami Vivekananda Maidan in Tripura's Agartala. Now, PM says Agartala has become the gateway for international trade in the northeast, and the state will soon become a business hub. Remember, the Legislative Assembly elections in Tripura is scheduled to be on the 16th of February. And the world-famous Pengongsu Lake is going to host the first ever frozen lake marathon on February the 20th, which is at an altitude of around 13,862 feet. The 21-kilometer marathon is India's first of its kind.
Well, German automotive manufacturer Audi has unveiled the Audi Q3 Sportback SUV in India at a price tag of 51.43 lakh rupees for the Q3 Sportback technology model. This is the company's first compact coupe crossover in the segment. And England bags their second win in the ICC Women T20 World Cup by beating Ireland by 4 wickets in South Africa. The second consecutive victory placed them on top of Group B with 4 points above India.
And with that, we're completely out of time on this one. You don't go anywhere. There's lots more action on the market coming up. Thank you so much for tuning in.